Like every other Tesla investor, you may have recorded significant losses with your Tesla shares this past few months, and this could be, to say the least, rather discouraging. Following the recent drops in the stock value, are you selling your shares off to the next available buyer, or are you an investor like George Soros, who keeps loading up on Tesla shares with the hope that there will be better gains in the future? Hey guys, welcome back to Everything Tesla Stock. Tesla stock has been quite unstable for a while, spelling serious uncertainty for investors, and the stock market's down 50%, and several investors have let go of their shares and are seeking better investment opportunities. But legendary investor George Soros seems largely unaffected. Based on a recent regulatory filing, Soros has taken advantage of Tesla's drop this year and loaded up on shares of the electric vehicle maker, tripling his stake in the past few months. Unlike several investors who have sold and are still selling their shares for fear of losing out, George Soros has bought about even more Tesla shares, increasing his holding on a significant amount. Why then has George Soros bought more Tesla shares? Keep watching to find out, but before we do, if you like this type of content, don't forget to like and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. George Soros is the founder of Soros Fund Management, a family office with about $28 billion in assets under management, and invests globally in a wide range of strategies and asset classes, including public equities, fixed income, commodities, foreign exchange, alternative assets, and private equity. The Tesla investor reportedly has a net worth estimated at $8.5 billion, up $1 billion as of November 22nd, according to the Bloomberg Billionaires Index. Soros is famous for his philanthropic efforts. Most of his firm's assets belong to Open Society Foundations, which supports people across the world who work for justice, equity, and free expression. The billionaire has been buying a lot of Tesla shares this year, and the recent drop in Tesla shares seems to have fostered another round of purchases of Tesla stock. Soros' Tesla stake was disclosed in the second quarter, which suggests that he had first acquired Tesla shares between April 1st and June 30th. At the time, the Tesla investor held 29,883 shares worth $20.1 million in its largest common stock initiation that was not a merger target or an option position. George Soros' investment firm also bought a large amount of Tesla bonds in the first quarter of 2018, giving the car company a major backer at the time. According to the filing released by the Securities and Exchange Commission, Soros Fund Management bought $35 million worth of convertible notes, which are bonds that can be converted into a specific number of common stock. The family office's ownership history with Tesla's common stock has been quite sparse over the years, although this has increased in recent times. The only other disclosed holdings were, as of March 31st, 2017, at 2,000 shares, and June 30th, 2014, at 355,250 shares. Soros currently owns through SFM 89,647 Tesla shares, according to a regulatory filing. The stake is valued at $16.4 million at the market price of $183.20, which was Tesla's stock price at the time of this purchase, thus tripling his Tesla position in 3 months. In a way, Soros' growing stake in Tesla shows that the billionaire investor is confident that the automaker could execute and meet its goals, even as its CEO Elon Musk seems extremely busy with Twitter. It's also a sign of confidence in Musk's strategy, and especially the fact that he has convinced that the CEO of Tesla will again make the car company his priority. It's no news then that Tesla's CEO Elon Musk has been pretty engaged with Tesla, and may even seem distracted with Twitter for now, but the narratives are soon to change. Tesla stock has taken a beating this year, and many fear that the automaker is losing demand across its markets. But taking a second to look, Tesla is still doing quite well, irrespective of the stock value. Tesla will likely qualify for tax credit next year, and take market shares of its competitors who do not qualify for this credit. In a recent note, longtime Tesla bear Citigroup analyst Itay Michaeli noted that the electric vehicle maker is poised to benefit from the Biden administration's Inflation Reduction Act. According to him, while macro-competitive concerns are likely to remain an overhang with capacity rising, in a hard landing scenario, Tesla's long-term competitive position will likely also improve and further enhance the inflation reduction. With this tax credit, Tesla will be able to produce cheaper cars and future increase the demand for its EVs. The car company is already looking to start automation at its Fremont facility, just like it did in China. According to recent news, the car company is sending engineers and production staff from its already recently upgraded Shanghai factory to its plant in Fremont, California, in a bid to boost production at the US facility. Tesla has been able to significantly increase production at its Shanghai factory, majorly due to automation of its production lines. The upgrade in Shanghai is credited with helping Tesla deliver a record 83,135 cars in China in September. This process took about 5 weeks and involved machinery, maintenance, and several other improvements. And so, by replicating the same at its Fremont facility, Tesla could significantly increase production. The EV maker has already predicted that it will average a 50% production increase over the next several years. The high demand for EVs is one factor that could increase Tesla's demand. EVs are gradually disrupting the gasoline market, and with gas prices going up, more people may turn to fuel-efficient alternatives. Tesla also makes high margins with its EVs compared to other EV companies. According to a recent report, Tesla earned 8 times as much profit per vehicle as Toyota Motor in the July to September quarter, despite being outsold more than 7-1. The Toyota Group sold 2.62 million vehicles in the quarter, 7.6 times as many as Tesla's 344,000 cars sold, but its net profit per vehicle came to around $1,200, 1/8 of Tesla's $9,570. This profit margin put Tesla ahead of Toyota in quarterly net profit for the first time since going public in 2010. No doubt, Tesla's profit margin metrics are going to be highly variable from one period to the next, just as it would be for any manufacturing company, especially as the automaker tries to rapidly expand its global output of EVs. But over time, Tesla may become more stable and focused more on metrics like free cash flow and earnings per car sold. George Soros' recent interaction with Tesla could further increase Tesla's interest in the eyes of investors. The Tesla investor is not the only one who remains bullish on Tesla, despite the recent challenges that the car company has been going through, and with his opinion about Tesla seeming to be shared by analysts who are closely following up with the EV maker. Several other investors like Cathie Wood, Ron Barron, Charlie Munger, and many others have reiterated their bullishness on the car company and its stock. American fund manager and investor Ron Barron recently stated that he thinks that Tesla stock could be worth $500 to $600 per share in 2025, and in 8 to 10 years, the company ought to be somewhere around $4.5 trillion. The stock expert had pinned his valuation target to Tesla's car production per year. He majorly focused on Tesla's ability to significantly scale its business over the next decade, and eventually start selling about 20 million cars per year. Tesla bull and Morgan Stanley analyst Adam Jonas was also on the same page, noting that while Tesla investors face risks with Elon Musk's Twitter activities, the company is still on pace to grow sales by about 37% next year. This should allow Tesla to establish its place as the market's dominant electric vehicle maker. He said, "We believe Tesla's gap to competition can potentially widen, particularly as EV prices pivot from inflationary to deflationary. With respect to the IRA, we believe Tesla is by far the best positioned OEM in terms of potential eligibility for consumer tax and production credits." Aside from boosting investors' interest in Tesla, Soros' purchases of Tesla shares could also put the car company on Soros Fund Management's 13F filings. SFM is a family office that manages public equity and private equity as well. And the stock market regulations require managers of funds with more than $100 million in US equities to file a document known as a 13F within 45 days of the end of the quarter to list their holdings in stocks that trade on US exchanges. The Tesla investors' US equity portfolio recently increased 4.3% quarter over quarter to almost $5.9 billion. And with Tesla on SMF's 13F filings, more investors could give their thoughts, and better thoughts at that, on Tesla's fundamentals rather than its current stock valuation. But what do you think? Let us know down below, and don't forget to let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.